We are back with Dr. Vikram Raya. Vic is one of my mentorship clients. He is a multifamily syndicator, CEO of Viking Capital, also a coach himself and a mentor. Vic, how you doing?
Greg, I'm excited and pumped up, man.
Yeah. So we're going to tell everybody about a two-property, $57 million acquisition you're working on that has some extra bonus depreciation for people that might want to get in that deal with you. And so tell us a little bit about the deal. How did you find this deal?
Yeah, absolutely. So, multifamily is our specialty. We've been buying real estate in multifamily since 2015. We have our company Viking Capital, and it's interesting because I grew up in Atlanta, so I know Atlanta very well. And I had a small single family home portfolio, but then I just realized that, as you taught me, Greg, it's all about scale. It's all about doors and number of units. And so we really grew our broker relationships. And so this deal was essentially a two-pack. It was about $96 million for both deals. And because we've been so active in Atlanta, I think we've done 15 deals in Atlanta. These the brokers came to us and said, "Hey, do you want to take this down?" And initially we said no. We sort of passed on it because we felt it was overpriced. And this was second half of 2022, like about October, November. And what we noticed was the price went down by 20% off its peak value. That's what piqued our interest. And the key is buying right, not necessarily selling right. So we definitely wanted to buy it right. And then on top of that, what attracted us, the two-part deal, I'm going to just focus on the part that the deal we're going to present today. It's called Crossings at McDonough. And what really attracted me is in this high, interest rate environment, this was a fixed interest rate and it was low leverage, which is what we wanted. This is a conservative way of getting a good deal. And so we got a fixed interest rate of 3.6%, Greg. And that
So
excited me.
you're assuming the debt.
Yeah, we're assuming a debt 3.6%, and then we're putting a supplemental on it. So the blended rate's about, I don't know, 3.9, about 4%.
Wow, that's awesome. Yeah, I mean, I don't think you can get anywhere near 5% these days.
Right. And so based on the cap rate and based on the interest rate, it made total sense. Where we're still having positive leverage, we're going in because a lot of people are buying deals now, but they're getting negative leverage, and we at Viking, that doesn't make sense for us.
Yeah, cool. Let's so you got a deal deck we can put up?
Yeah, absolutely.
Little deal summary, kind of work through that, take a look at it.
So here it is. It's and we like it because it's during times of crisis, during times of recession and correction, people want newer and bigger and in stable, safe areas. So we've chosen Atlanta, which is one of the huge growth markets. Number two, it's a good vintage, 2005, so it'll attract higher quality tenants. And number three, it has large floor sizes and spaces. So this is a type of place that people sort of navigate to during times of uncertainty. So it's 252 units, and it is purchase price about $57 million. Average rent when we first got under contract was about $1,500. I think the last couple of leases have been close to $1,800. So already we're starting to hit our year one pro forma even before we're taking the property over. And just for investors who don't know how we've structured our investment classes, we've chosen to give investors 3 different investment classes so they have optionality. They can do a Class A, which is essentially a prioritized cash flow of 10% preferred return. And the goal is they're really focusing on cash flow and they're not part of the waterfall. Class B is a 7% preferred return, and they have a split of 70-30. And they're also participating in the waterfall. And the minimum investment for that is only $50K. And then we have the reserve class. This is for our investors who invest $1 million or more, and they get an 8% preferred and an 80-20 split. Again, this is one of the best in the industry in terms of sort of the profit sharing for an investor in multifamily.
Yeah, you don't see 80-20 a lot on top of a preferred.
Absolutely. So we really want to reward some of the investors who either invested time and time again, or they invest a large investment amount. But either way, it doesn't matter if you choose Class A, Class B, reserve. You can do individual. You can do a blend. And so I joke, like I tell my investment team, they can it's a Malbec or a Pinot, or it's sort of a blend. You can have a little bit of everything. And the capital stack is there's about 32 million of debt. We have Class A, Class B, and reserve about 30. So it is a low leverage deal, and there's a supplemental on top of that. But it allows us not to have to worry about the concerns that most people are having, which is their debt payments. And the whole period right now, it's 3.5 years left on the loan we're assuming. So literally there will be a capital event or a liquidity event year 3. And so there's 2 exit options. One, we can choose to refinance in year 3, where we presume at that point interest rates will be lower than they are now. Or we could go ahead and sell it in year 3 and exit out everybody, and everyone can take their profits and appreciation. So right now, Class A, a straight 10% for 5 years will be about 150K if you invest 100,000 in. And for Class B, it ends up being for the 5 years about $175,000 if $100,000 in. And reserve class, if you invest $1 million, you get 1.95, almost a 2x multiple right there.
Yeah,
And
that's not
and
bad at all, especially right now. I know a lot of people with what's going on with banks and stuff, or where do I put my cash? And with a deal like this, it makes a lot of sense, because I mean, if you bought a 3-year T-bill right now, I mean, you might get 4.5%.
And the cool thing is, I mean, we're trying to be super conservative. I mean, there's a pref, but we're really building up to that pref, and we have reserves. We have a really detailed business plan that we're going to execute. The company we use for property management is called First Communities. We've worked with them very closely to where they built an internal Viking team for us, and we have our own regionals, we have our own VPs, and we have our asset manager who's based out of Atlanta. So we're going to have very close eyes and ears and our pulse on this property. And it already looks great and it's beautiful, but we have a very strategic value add plan that we're going to execute. And we've been doing this for we have a whole team now. We have acquisitions, we have asset management, we have investor relations, we have finance, operations, investor services. And really, this allows us to really provide that excellent level of customer service to our investors. But let me just give our listeners here just some of the highlights of why this deal is exciting. As I mentioned, number one, 3.6%. The main part of the debt is 3.6%, historically low fixed debt. Number two, we're buying it with strong occupancy, 95%. Number three, we got almost a 20% discount. It should have been 68 million. It should have been 68 million. We're getting it for 11 million off at 57 million. And this is based on recent comps and sales of what things were trading at in that submarket. Number four, we've done good due diligence on it. So the people who are here on this property are healthcare professionals, they're educators, they're logistical experts, and they're high-paid government workers. Average income on the property, 61,000. So that's phenomenal. There is a ton of job growth. So this is based on the I-75 corridor that goes up into downtown Atlanta. And along that, there's warehouses, there's logistical centers. So things like Wayfair, Tory Burch, Home Depot, Carter's, Amazon, Whirlpool, John Deere, all these companies have large industrial presence there, and they're still hiring because there's a shortage of demand. We've done this already on a deal just north of this project called Marabella Place. We purchased it in January 2021 at 52 million. We've got it appraised recently for 82 million. So we've done this before. So we have a proven record for success. Again, we're buying it from an institution. So there's already no deferred maintenance. It's just they fell asleep at the wheel, a little bit sluggish in their the way they handle their tenants. They didn't really push rents. And so it just gives us another opportunity for value add on top of the physical value add we're going to do. And obviously, Atlanta, it's a growth engine. It's done well during all the economic cycles for the last 20 years. And the reason why this crossing of McDonough is really amazing is because it's at the epicenter of the growth. There is the #1 busiest airport in the world, Atlanta Hartsfield, which is about 20 miles away. There's record industrial demand. There's highway infrastructure. There's a railroad access, CSX, the Port of Savannah and the Port of Brunswick all run their distribution pathway along where the property is located. And it's a 2005 vintage, so it's sort of core plus. It's sort of a newer build, but it also has that value add component. So it has the best. Core plus provides safety, value add provides growth. You get that blend. And we try to be very conservative with our underwriting and our deals. So it's, low leverage debt. We've stress tested it even in this environment. It's positive leveraged. We have reserves built in for higher taxes, higher insurance. And we really know the type of value add where we don't over improve the property. We just do the right amount where we can really excel in our submarket. And there's multiple exit options. We can sell free and clear. We can refinance in year 3. We can have our investors will have a capital event either way. And since we own so many properties in this part of Atlanta, the southern rim of Atlanta, we can either sell it individually or as a portfolio. And then finally, I mean, who doesn't want bonus depreciation? So this year we're getting 80% bonus depreciation, 2023. And we've calculated with our tax attorneys and our specialists. And so for $100,000 investment, you can get between $55,000 to $60,000 off your as bonus depreciation and tax savings. So that's sort of what we have here. And in terms of what people are expecting for us to do on the project, we're doing smart tech inside, premium locks, thermostats. We're doing quartz style countertops, LED lighting package. We're doing a little bit of washer dryer program. We're painting it. We're updating the garage doors, some asphalt stripe and repair, and some landscape. So this is sort of what we're going to do for the project and really take it to that next level and do it in a very expedited way so we can take advantage of those rent premiums. But we're not also overthinking how much premiums we're going to get in this more of a conservative environment. So we're being careful.
Yeah, that's awesome. So it looks like a nice place to park some capital for a
very
few short
safe,
years
very
for
conservative
somebody.
deal.
Yeah, looking for somewhere to go, get away from the banks right now while the banks are trying to figure themselves out. So if somebody wants to invest in this deal, where do they go? How do they find you or the deal, or where do they go?
Sure. I'm going to put my cell phone in there as well. And we have invest@vikingcaplc.com. I'll put that as the two different. Let me see if there's a website here. Otherwise, let me just share our website. Our website's vikingmultifamily.com. So that's our website, vikingmultifamily.com. And our email is invest@vikingcapllc.com. And then I'll also give people my cell phone if they just want to text me or ping me. My cell phone is 706-951-4023. So those
Awesome.
are the 3
yeah,
different
and also
ways.
if you shoot that to me, I'll put that in the notes as well, so they'll have it right there when I post the video later. But yeah, that's fantastic, man. This looks like an awesome deal. Great place for people to park some cash right now in a uncertain time, get some good yield, and be part of the I mean, what do y'all have, like 600 million, 700 million?
700 million, Greg.
Yeah. So be part of your path to $1 billion.
Yes, absolutely. And yeah, I'd love to answer any questions and make sure people understand the deal and then help them get to their financial goals.
Yeah, awesome. Well, Vic, I appreciate you taking a few minutes to share this with us, and I'll post this out and put those links in there so people can connect with you and get involved in the deal.
Thanks, Greg.